We thought this was going to be an earnings recession. That's what we thought as recently as probably a month ago. Earnings season is shaping up to be much better than anticipated. And I think yesterday was the day they said we're probably not going to wind up in an earnings decline. What do you think? Where is the market? If that's the case, what's fair valuation?
If you look at the companies that have reported earnings so far and how much they've reported in terms of revenue growth and earnings growth, it may not be a recession in terms of being actually below zero, but it's the slowest earnings growth in several years. It's the slowest revenue growth in several years. And the only reason the earnings growth hasn't gone negative is because companies have been exhibiting really strong cost control. So you saw that with the banks, you saw that with some of the tech companies, including some of the semiconductor companies. And in cases like 3M, where they had a revenue miss and they didn't exhibit strong cost control, they're now having to take really drastic action. So it may not technically be a recession, but you're seeing revenue growth really decelerate. When we see those GDP numbers come out later today, later this morning, those are probably going to be soft. And even though revenue is up a few percentage points, it's not what we've been used to. And with the market up 17% this year,
well, that's what I'm going to get to. Okay, with the market up 17%, you would tell people to kind of slow down even with these better than expected numbers?
Absolutely. The way we're looking at this is why is the market giving so many companies the benefit of the doubt? Because you can see clearly the pressures that the top line is under. And you can see clearly that, again, the only reason they're showing earnings growth is because of tight expense control.
Guy, what do you think?
Well, I think you make an excellent point. I mean, earnings have been decelerating. There's no question about it. And I think the market did something in October that it probably needed to do, flush itself out. I think we've reversed,
we're back.
In my opinion. The only reason we've reversed is because our Federal Reserve took a 180. Now, you could say they were right to do it, wrong to do it. I don't want to have that argument. But to me, most of this move back, this 22% move back to the upside, has been predicated on the fact that Jerome Powell went from being extraordinarily hawkish to extraordinarily dovish.
When you're trying to figure out what's a fair value for markets, you have to look at what the yield is on treasuries. And so if the Fed is out of the game, if treasuries are going to stay at 2.5%, where's a better alternative? I don't want to say we're back to there is no alternative, but I want to say you got to fairly value that. And if the Fed is out of the game, then maybe it's not such a crazy price.
But you can see some advantage to being in cash these days. A couple of years ago, you got nothing on cash, and now you can get 2.5% on cash, maybe a little bit more. 2.5% is a stretch.
I've seen places where it's easy to get 2.5 is a little bit more of a stretch, unless you want to lock it up for an extended period.
Somewhere in the middle. Somewhere in the middle. If you go out 6, 12 months on a CD, but whatever the number is, it's better than it used to be. And I do also hesitate to go back to Tina. There is no alternative.
Right.
But analytically, it kind of feels like that's where we're going back to, because you're just not going to see the earnings and revenue growth. And everyone, if you listen to these conference calls, the number of mentions of optimism versus pessimism, stronger versus weaker, those ratios are the worst they've been in several years. And everyone's looking for a back half rebound, but they're not citing evidence. And when the analysts ask them on the calls, why do you think there's going to be a back half rebound? Are you seeing actual orders increase that far out?
Sure.
Nobody's seeing it.
Well, and Vince Reinhart was here earlier this morning. He made the point that this may be the best quarter we're going to get in terms of GDP growth because of those issues, because margins are going to get more tightly squeezed, because companies are going to have to pay more for things like labor, as we have a very tight labor market. Those are all fair points to kind of put into it. He also made the point that he's not necessarily sure the Fed is out for forever. If the economy improves, that maybe they're not out all year.
Well, certainly they did a real pivot, right, in January, and then they cemented that in March. And if they're true to what they say of being very data dependent, then if things accelerate, they will come back in. But given what we see now, in terms of leading indicators, in terms of, again, earnings and revenues and GDP, it doesn't look as though they're going to be justified in coming back in, and he will take some political.
Adami, you've been pushing back on this rebound in the market the entire way, too?
No,
you have not.
I'm not pushing back.
Because a lot of your colleagues on that show have been. Is it something in the water, or the sweat, or the Gatorade, or something? What is it? What is it with you guys? You don't like prosperity?
No, I love prosperity.
Have you been pushing back on this
but
the
it's
entire way?
So now I know we got to get
now we're out of time.
No, I'm not suggesting
what are you
anything.
saying?
What I'm saying is,
do you feel like you've been sufficiently bullish since the lows in December?
Absolutely
You have not. So you're taking.
Absolutely not.
Okay, so
no, but I'm being honest. I have not been sufficiently
in this case,
bullish.
you're being honest. Thank you.
No, I'm always try to be honest.
Okay.
No, but what I'm saying is, I don't think a slowdown.
Be honest with you.
I don't think a slowdown is a bad thing. I think we look at it for whatever reason. I think part of the cycle is allowing things to slow down, is allowing some of the poorer companies to go by the wayside and let some of the newer companies come up. Recessions are an essential part of the business cycle. And I think our Federal Reserve, since Greenspan, this has nothing to do with politics, has said, you know what, we can alchemy them out. And I think that's a really bad thing because you have to let the cycle work. And in October, we decided we were, and then all of a sudden we stopped and said, you know what, game's over. We're going to go right back to in my opinion, the mistakes we've been making for the last 10 years.